You know, when you think about the world's greatest investors, like Warren Buffett, you probably imagine these super complex formulas and spreadsheets, right? Well, what if I told you his entire philosophy boils down to just two simple rules? Forget the 10-year forecasts. We're about to dig into a framework that is so simple, it's actually revolutionary.
So picture this. It's 1998. You're at the legendary Berkshire Hathaway shareholder meeting. Thousands of people are there, just hanging on every single word from Warren Buffett. Then an investor steps up to the microphone with a question that, on the surface, seems perfectly logical.
He asks Buffett for his long-term vision. How are the companies he's investing in going to grow? What's the plan for the next decade? It's the kind of forward-looking question you'd expect any serious investor to ask. But Buffett's answer? Well, let's just say nobody saw it coming.
So did Buffett lay out some grand 10-year plan? Did he start talking about market projections? Nope, not even close. Instead, he dropped this piece of wisdom that just turns all that conventional thinking completely on its head. He just flat out says, I don't know. And not only that, he doesn't even try to know. Now, think about that for a second. This is Warren Buffett, the king of long-term buy-and-hold investing. And he's basically saying, your guess is as good as mine when it comes to the distant future. It seems to go against everything we're taught about strategy.
So what gives? Well, for Buffett, trying to predict the future is actually a trap. It's a massive distraction that can blind you to the golden opportunities that are literally staring you right in the face right now.
Okay, so if he's not a fortune teller, what is he doing? He's a master of focus, and he uses this deceptively simple two-question filter for every single decision he makes. And that's it. Seriously, this is the whole thing. Just two questions. First, is this factor important? Like, does it fundamentally drive the success of the business? And second, is it knowable? Can I, right now, with a high degree of confidence, actually understand it? And here's the secret sauce. Buffett only pulls the trigger. He only invests when the answer to both of those questions is a resounding yes. He'll be the first to tell you there's a universe of important things that he just doesn't get. And there's plenty of stuff he gets that honestly just doesn't matter. The real magic, the sweet spot, is in that tiny little overlap.
This little matrix here just lays it all out perfectly. If something's super important, but it's unknowable, you pass. If you can know it, but it's not really that important to the business, you pass. See the pattern? The only time you act is in that top left corner. It's a simple but incredibly powerful filter against making huge mistakes.
All right, let's make this real. Let's see this framework in action with one of Buffett's most iconic investments ever, Coca-Cola. And this is where the idea really proves its worth, right in the middle of a crisis. So let's rewind the clock, way back to 1919. Coca-Cola goes public, and its stock is priced at $40 a share. The company's got this incredibly popular product, the future looks bright, you know how it goes. But then, just 1 year later, bam! The stock had completely collapsed. It's down to $19. I mean, that's a catastrophic drop of more than 50%. To anyone on the outside, this looks like a total disaster. The investment's a failure, game over, right? But hold on. If you actually dig into why the stock crashed, the story changes. The problems weren't with the drink itself. No, it was all this external noise, messy contracts with their bottlers, big problems with their sugar suppliers. But the fundamental business, the simple product that people loved, was still perfectly intact. Now, try to put yourself in that moment, back in 1920, and make a 10-year forecast. What do you see? You're looking at post-war chaos, the Great Depression is just around the corner, then you've got World War II and the dawn of the atomic age. A long-range view would have been overwhelmingly negative and just filled with unknowable risk. So let's just hit pause on all that global chaos for a second and apply Buffett's two rules. Amidst all the panic and the crashing stock price, what was the simple, important, and knowable truth about Coca-Cola in 1920? It was this. Coca-Cola sold a simple product that people absolutely loved, and they could sell it for a profit. That's it. That was important, and that was knowable. You didn't need a crystal ball to figure that out. And by zeroing in on that simple, knowable truth, you would have spotted the opportunity of a lifetime. Today, Coca-Cola serves over 1 billion drinks every single day. 1 billion little moments of refreshment, all built on that one simple, understandable idea.
So what's the big takeaway from all this? It really comes down to the power of consciously narrowing your field of vision so you can actually see what truly matters.
This slide just says it all, doesn't it? You can get lost in the fog of a long-range forecast trying to predict these complex, crazy futures, and it just leads to paralysis. Or you can do it Buffett's way, a laser focus on what is important and knowable, which leads to clear, confident action.
The bottom line is simple. If you try to see everything, you end up seeing nothing that matters. The real genius lies in knowing what to ignore and focusing on the very few things that truly move the needle.
And you know, this isn't just about investing. This is about life. So I'll leave you with this question. What simple, important truth are you missing right now because you're too busy staring way off at the horizon? Find it, and you might just find your next great opportunity.